Phil Flynn. Phil, great to see you. Getting a little worried about oil prices here and the effect on gas prices. Tell us what's going on in the market right now.
I don't think you're alone, Brian. There's a lot of people. I've been getting, my phone calls been going off the hook today, like what the heck is going on? And what we're seeing here is a situation where global demand is coming back faster than supply. You know, it's kind of interesting. You mentioned geopolitical tensions. There is absolutely no doubt that geopolitical risk factors for the oil market have gone up. And a lot of that, in part, is because the U.S. has pulled back from being a major oil producer. You know, in recent years, when the U.S. was the biggest producer in the world, you'd have these disruptions. The Houthi rebels, for example, they shot a missile into the UAE. You shoot these things, you have these tensions, and the oil market wouldn't move. But now, because U.S. producers pull back, supplies are tight. When these things happen, prices soar.
Phil, I want to just point to that again and again, and I want you to expand on this because this is the story. You always get geopolitical tension. There's always something going on, right? But when the U.S. is fully engaged in these markets and producing, it mutes a lot of those effects. But the U.S. pullback, the chilling effect on investment that we've gotten, and look, it's come with the Biden administration. That is the story, Phil. And Phil, that's going to be the story now for how long? I mean, this is what's going to drive markets.
Until the Biden administration sends a signal that they're going to change course. Listen, there's a lot of things that happened with the pandemic. We know that, right? We know about the supply chain. We know all about that. But the most chilling thing that happened in the global markets was when the Biden administration basically said that the U.S. is getting out of the oil business, right? Mm-hmm. You know, right after he became inaugurated, you know, within hours, let's cancel the Keystone Pipeline. We're going to put on drilling moratoriums. And then when we need more supply, we're going to look to OPEC. And the investment hit that the U.S. industry has taken is going to be felt for years to come. Mm-hmm. And because of that, we're seeing these tight supplies.
So, Phil, you've got the investment hit. Supply has pulled back. It's probably not going to come back. Now you're seeing these higher prices. The president and his administration are floating once again the idea of releasing strategic petroleum reserves, which they did just a couple of months ago. Talk about what that difference that makes, if any, in the oil markets and gas prices that we're going to see going forward.
It reminds me of the old adage, Brian, if at first you don't succeed, try again. We just released 50 million barrels from the Strategic Petroleum Reserve. That was supposed to solve all our problems. It was supposed to send a message to OPEC that we're going to clamp down on them. And it did nothing for U.S. gasoline prices. But everybody says, well, gasoline prices went down a little bit. That had nothing to do with the release from the reserve because that oil never went to refiners. That had everything to do with Omicron. And so the Biden administration is just squandering taxpayers' money by feeding, you know, barrels of oil into the global market that they want, and they're going to buy at a discount. But what's going to happen when our supplies are so tight, we're going to actually need that supplies, we're going to have to pay a higher price for it. So it's just bad policy, and it's going to backfire, and it already has.
It's bad policy that tears up, you know, the seeds of oil production and energy independence. It tears those up and they don't grow, and you feel that years and years down the road. Phil, in the meantime, we end up looking to OPEC. We end up going to OPEC and saying, please, will you pump more oil? Phil, do you see any chance that any of those suppliers in the Middle East are going to step up and try to meet that demand in the coming year?
They're not going to, and some believe they can't. You know, they look at the fact that OPEC right now is having a hard time meeting their quota. We just heard today that Russia is saying we're having production issues on our end. We might not be able to raise production by the promised 100,000 barrels a day. And part of it is because Saudi Arabia has most of the spare production capacity in OPEC. And let's face it, they don't get along with the Biden administration. So I think as long as Saudi Arabia is in control, I'm not expecting OPEC to do much.
Look, this is not a good news story. Of course, nobody wants to hear gas prices are going up, but it's important to understand the long-term effects of systematically trying to undermine a key industry in this country, the oil and gas industry, and all that it produces. Phil, we really appreciate you showing us what's going on there. Thanks very much.
Thanks, Brad.